Economists have been closely watching for March's inflation report for clues on what the Fed's next move is. Let's dive into it with Yahoo Finance's Jennifer Schonberger here, live and living color on set with us. Jennifer.
Good morning, Brad. It's great to be with you guys in studio.
Absolutely.
I got to tell you, I thought that inflation report was still a bit sticky. If you look, yes, month over month, it came down a bit, but year over year on that core number, which is what the Fed really zeroes in on, excluding those volatile food and energy prices, it was still stuck at 5.6%. Well above the Fed's 2% target on inflation. And yesterday, I spoke with New York Fed President John Williams, who says inflation still remains too high and that the Fed still has a lot of work to do. And this report seems to be in line with that. Take a listen to what he told me yesterday.
But inflation is still very high, and I would just mention that, some of this core services inflation, excluding housing, that hasn't budged yet. So still got our work cut out for us to get inflation back to 2%.
He said one additional rate hike is still the starting point for mapping out policy right now, and that he remains open to either raising rates again in May or possibly waiting until the summer, depending on the data. When I asked him whether he'd be open to resuming rate hikes after pausing if inflation remained too high, he told me absolutely.
And of course, he was the only one who spoke exclusively with you, Jen, but we did hear publicly from some other Fed speakers as well. One of those who stood out to me was Austin Goolsbee, the new kid on the block when it comes to members of the Fed. And there was some interesting commentary.
Yeah, he seems to be a little bit more dovish. He's very focused on the potential reverberations from the bank failures that we've seen and the potential for credit tightening there. And he thinks that the Fed should be cautious here and really gather data, maybe take a step back. On the flip side, we also heard from Minneapolis Fed President Neel Kashkari last night at a town hall. And he says, yes, the Fed's rate hikes and the reverberations from these bank failures increase the odds of a recession. However, the failure to bring inflation down could be worse and could hurt the job market. And he was talking to students in Montana State University, and he says if we fail to bring inflation down, your job prospects are going to be worse. So Kashkari still very much in that hawkish camp. Woo. So diversity of views here.
Yeah, I'm sure the students love to hear that kind of commentary. But the Fed's on the case, I guess, is what the message he was communicating. Right. Jen Schonberger, great to see you in studio.
Thank you.
Thanks for being here.